Welcome back to the Build It Up series. This is episode 6, Bitcoin, digital gold, or just hype. In the last episode, we talked about good debt versus bad debt, how some debt holds you back, but how using the right kind of debt can actually push you forward and help you build wealth. Today we're switching gears. We're going to talk about Bitcoin. Is it really digital gold, or is it just hype? So before we get into it, and whether it's worth buying and whether you want to hold it long term, let's get clear on what it actually is, okay? Because without the basics, it feels a little bit like magic internet money. So what is Bitcoin? Well, I like to explain Bitcoin as digital property. It's not physical though, you can't hold it, but it is real, and it's secured to some extent by a global distributed computer network. So unlike cash or dollars, no one can just print more of it, okay? It lives on a network of millions of computers all over the world verifying every single transaction. And it's that network that makes Bitcoin secure. If you wanted to shut Bitcoin down, you'd have to turn off the entire network, and turn off the whole internet, right? Everywhere, all at once. And it's just not going to happen. So, even if one country bans it, it can keep running somewhere else. So it'd be like trying to erase the whole internet, right? Which is, it's just not going to happen. So another thing about Bitcoin, one of the very important features is that it is limited in supply. There are 21 million Bitcoin, and that can never change, okay? So it has that scarcity. So it carries a higher risk than gold or property or shares, but it still has that quality of scarcity, which is so important. But it can be hacked, right? Unlike gold. And especially if you hold it on an exchange. Click the wrong link on your Coinbase account and boom, your money's gone. Land can't glitch out, right? Shares, when you buy a share in a company, they tend to have land and buildings and staff and intellectual property and factories and machines. Bitcoin's virtual. It relies on technology. So if you hold it yourself, make sure you don't lose your private keys, because then your money's gone. Send it to your wrong address from your wallet to someone else's wallet, get a digit wrong, your money's gone. If one day the world stops valuing Bitcoin, your money's gone, right? So you need to understand where Bitcoin fits, okay? I think there is a place for it, but it is higher risk. In my personal opinion, I like to have property and shares as the base layer. Then I build on that, maybe with private equity, some gold and silver, and then build on that perhaps with some Bitcoin. So it's a part of your portfolio. It's another layer, right? Like a digital hedge against governments printing money, which just creates inflation, which is just theft, really. So that's kind of the big picture here, okay? You want to move away from fiat currencies. That's the cash that governments just endlessly print, and move it into hard assets, okay? So it's just get it out of cash into assets, things that hold real value. And Bitcoin is an important part of that conversation, okay? Though it is higher risk. I've spent probably hundreds of hours researching Bitcoin and crypto and setting up wallets on different chains and moving crypto across chains and conversions and all the rest of it. I've read a lot of books. The Bitcoin Standard by Safedin Amos is probably one of my favorites. It explains how Bitcoin forces you to think about inflation and money printing and why currencies lose value. But if you're going to hold Bitcoin yourself, offline in cold storage, you need to be super careful, right? If you lose your keys, your money's gone. As I said before, if you move it, you put a wrong digit in the address, your money's gone. So for most people, I'd recommend buying an ETF, right? On the stock exchange, you can buy something like IBIT. It's backed by BlackRock, the world's largest sort of investment manager, approved by SEC, trades on the stock exchange. So you can just buy it like any share on Sharesies or Hatch, or if you have a broker like Craig's or something, it's super easy. And if something goes wrong, there's a help desk, right? Whereas with Bitcoin, once you lose it, it's gone. If someone steals it from you, it's gone, okay? And the Bitcoin purists will say, no, the exchange could fail and the governments are going to steal it and all the rest of it. They'll say you should hold it yourself. That's great if you're a very techie person you know how it's going to, you trust yourself. I'd lose the key, right? As simple as that. And then one day it'd be worth millions and I couldn't get into it. So just buy an ETF. And sure, if you live in Venezuela or somewhere in a war-torn place or whatever, yeah, great. I'd keep it on an ETF with you, and you can cross the border if you need to, and you've got your money with you. Fortunately, in places like New Zealand, Australia, Canada, US, we're not in that situation yet. All right. So I think that owning some Bitcoin is a good thing. I think it'll probably continue to increase in value over time. But like, if for no other reason, young people are growing up with the internet, with gaming, virtual currencies. They're buying a sword and a shield in a game. They're sort of in that world where virtual currency is just something they do all the time. And I think Bitcoin really sits at the base layer of that, right? I mean, you can buy and sell online. You can muck around with all the different cryptos and XRP and Solana and Ethereum. And there's hundreds, if not thousands of cryptocurrencies. But if you're actually serious about investing, then buy Bitcoin, right? Forget about the others. Bitcoin's the only one that's really limited, decentralized. That 21 million, it's not going to change, right? But it is volatile. So you've got to be prepared for that. The price swings around a lot, and some people will find that very, very difficult. So if you decide that you are going to put a portion of your savings into Bitcoin, I'd say buy an ETF and don't look at it. Maybe set up a monthly investment and you just auto buy each month and you don't look at it. Because if you do, and one day you look at your app and you see that it's dropped 30%, you might freak out and sell it. Okay, so I'd say Bitcoin, don't ignore it. Don't bet the farm on it either. Right, in the next episode, we're going to talk about leverage. How to use good debt smartly to build wealth a bit faster without taking on unnecessary risk. Thanks for listening.